All right, what I want everyone to understand is, let's say you were trading and you don't have the matrix. Okay, you're just purely trading, and in your trading, we're always looking for conditions in a market that we can dare what the market is telling us it wants to do. Okay? Our whole approach to what we do is we are always daring the market that it wants to do something. When we dare the market, the whole idea, the whole concept of us daring the market is that every time we dare the market, we put very little at risk, because we know that if the market does go ahead and takes us up on our dare, that we want to be in a position so that we can dare the market again. So if you notice, I've just given you a chart with just clean. There's nothing on it except basically candles. And we could actually clean the candles. I mean, it does not matter. I mean, even if you read candles, or you're someone who's gone into, you know, the whole studying of candles and how to interpret them. But what I want you to look is just price movement alone. You know, how the price behaves at certain areas. And these areas, we have no clue that there exists Fibonacci levels, or for that matter, any other type of mathematics, you know, to evaluate or calculate. Just simply price action and how the price reacts when it gets to a certain area. So if you walk here early in the morning, and you'll find that the markets always, you know, they have constant areas of where you can dare the market. And if we were to come here and look at this right now, you know, this little area back in here, you know, this might have been in about a 10-point range. And if you wanted to dare the market, you know, where would you dare the market? Where would it be very easy for you to make a decision to dare the market? And there's two schools of thoughts. Okay, you could always dare the market when it approached this level, which is in theory, this is what most books and most of the systems that are out there are designed to do. They basically teach you that when the market hits a certain area, and I'm going to take into account that everybody knows what breakouts are. Breakouts normally means you're breaking outside of a high, a low, of a certain range you've been in. And that range could be a 5-minute range, it could be a 10-minute range, it could be a 15-minute range, a 40-minute, you know, a 1-hour range, a daily range, a weekly range, a monthly range. We all understand that, right? Okay. So school of thought, or what most traders are being taught, is every time we see that there's a breakout, the direction the market is going, in this case you can see, you know, the market is traveling here to the upside. All right, what the school of thought is, once you break out, that's when the trend is established, and the trend right now is telling you that the market wants to go higher. So what do most traders do? They dare the market to go higher, and in doing so, they come in and buy. All right, they go ahead and buy in these areas. Now, when they buy here, if they're wrong, okay, if they're wrong, now you've got to accept the consequences that you dared the market, and in daring the market, you've got to now say, well, if the market is not really going to continue the dare that I've just you know, put in its hands, that I've gone ahead and said, okay, I dare you to go higher. If it doesn't continue going higher, where would I be happy in setting my stop? In other words, in taking the outcome of it not working. And what I have found is this type of trading, okay, this type of trading, I have found that for the most part, at best, the probability of these things working is about 20%. And the reason for that is because the markets don't trend a lot. Okay, the markets really spend more time ranging than they do trend, than they do trending. So what I've seen at best at best. And then I think really the number is lower. It's more along the lines of about 15%. Okay, 15% of the time the market is in a trend, or 20%, as I said here. I've noticed that probably somewhere around 60%, the market is always in a range. And that range, like I said, will be, it could be a 5-minute range, it can be a 15-minute, 1 hour, and so forth. But the market spends more time in this area than it does here. So, if we are going to trade and we want to find the higher probability of success trades, what kind of trade would we want to trade? And that's what our system is designed to do. Our system is designed to trade the higher probability of occurrences, which are right here in the 60%. So we don't like to trade breakouts because these breakouts have a tendency to fake us a lot, and then they have a tendency to where we have too many options. By the way, when they do work, we have too many options of where to place our stops. So if you had gone ahead and bought here and dared the market to continue going higher, all right, where would you have set your stop? And this is always the problem we have as traders. We have too many choices, and when we have too many choices, we get confused. And so we start second guessing ourselves when we, decide to say, well, what I'm going to do is we broke outside and I'm going to place my stop right here, just below the breakout area. Okay? And then you get the market, and what does the market do? It comes back here, taps you out. All right? And then eventually, as you can see, the market did run. I mean, you were right to dare the market. You were right to dare the market. The problem was the market was going to do it, and it was going to do it after it came back and tapped you out of your stop, which was right in here. So the next thing you do as a trader is you say, well, the problem was my stop loss. I had a good entry. I still think the entry is good, but my stop loss is the problem. So where's the next place you go ahead and you say, well, where would it be reasonable to place my stop? And this is, we're going through the whole process of elimination here. As this is the way we deduct things. So you say, oh, I recognize I should have had my stop down here. Well, you go on and you do this next time around. The market does, look what it did. It came back, and what did it do? It came back and stopped you out from here. Only to find that then eventually it did what you thought it was going to do. So you find that in these instances, you kind of get caught in a scenario where you want to trade breakouts, but if you're going to trade breakouts, when are the best times to trade them? And this is what goes back to what we talk about. Well, why don't we trade the breakouts in the ranges, inside the ranges? So for us, it's always about, okay, if the market was going to go higher and we thought it was going to go higher, why don't we wait for these retracements to go ahead and execute our trades? It makes sense, right? Now here's the other thing. Now let's go into the next part of our philosophy of why every time we talk about in our trades, when there's a trend going in a certain direction, we don't chase it. We actually wait for prices to come back, because they almost always do. They spend more time doing this in here than they do this. So I'm okay if this trade takes off and I'm not in it, because more often than not, 60% of the time, the trade will come back and work itself back to the range or inside the range before it does eventually take off, if it does at all. So this is the next, this is the next part of our trading, and I just want you to see how we progress into our truth and dare. And this is why a lot of times you'll see that we might have the little arrows pointing in one direction, and yet we're doing the opposite. And the reason for that is we recognize, which is what the matrix does, it allows us to see that the market now may give us the best possibility for the market to do the opposite of what everyone else is thinking it's going to do. Okay, and that's what the tool is designed to do, to help you see that. So let's go back to this little scenario back here again. And I'm doing it at a very small level, and then you guys will see how we can expand, because this is what you can do all day. You can constantly dare the market to do something. And like I said, if you're at 50% success rate, if your management skills are correct, if you're bringing in the points and you're allowing the process to work out, you're going to have a profitable business. And all we're trying to do is get you to see more and more of these opportunities, because they occur many times throughout the day. It's just a matter of you feeling comfortable with seeing the cycle and recognizing, is this a moment in the market where I want to go ahead and dare it to do something. But what we like to do is, if I see this trading like this, and again, irrelevant to any other information that we have in our hands, the only thing I have right now is that I'm going to challenge the market. I'm going to dare the market. And if I'm going to dare the market based on how we trade, every time it reaches this area in here, I'm not going to buy it. What am I going to do? I'm going to sell it. Why? Because if it goes higher, then there's a chance that that breakout is for real. There may be orders that follow in. And it's very simple for me to go ahead and set my stop right in here. Very, very tight stop. So if the market does break like it did here, I lose a little bit. I lose a little bit. And then what I can do is I can look for other areas where I can dare the market again. It may be up here somewhere. It may be higher. But I can dare the market again to do the same thing here. And then guess what? As you can see here, if I dared the market at this level here, look, finally this one did pay off. And so I lost a little, and I made twice as much from what I initially lost. Okay? Same thing down here. If I think the market was going to stay in here, and I think, and I'm looking for this, am I going to look for a breakout of this? No. What am I doing down here? I'm buying. Why? Because I can set my stop down here, and if we do get through it and I get stopped out, so be it. But if it works, same thing. I put at risk maybe 3-5 points right in here, and look, the trade came back and made 10. And this is what we can do all day long. Once you start understanding some of the other intricacies that we put in the matrix, so you can start understanding this. But the mindset of what we're doing, even if you did not understand any of the setups, it's always predicated on, I am daring the market to do something, and if it does do it, then I'll get out, I'll take my small loss, and then I'll just go ahead and look at another area that I can dare the market again. And I'll keep daring the market until eventually I win. And if I can do this and I can just get 50% of it right, once more, I'm going to have a profitable business if I manage myself correctly. If I put at risk 5 points, then I've got to go and get 10. If I risk 3, I got to go get 6. If I risk 4, I got to go get 8. And so on. But this is basically how simple, the whole mindset of what we're trying to do, and then eventually how to incorporate that into our philosophies and in terms of our matrix setups. Now, any questions up to this point? Is there a light coming on for you here? Thank you, Frank. Anybody else wants to respond outside of Frank? It's important you guys, you need to, I need to know you guys are listening. All right? Thank you. Excellent. Because if you can do this, guys, it doesn't matter. I'm telling you right now. I mean, you can even mess up and not even seeing the trade. You can even do bad decisions in trade setups, but it doesn't matter because you've mastered the art of saying, I'm daring the market, and this is what I'm going to go ahead and put at, I'm going to put to risk. And if it doesn't work, I'm okay with it. I'll get out. What you don't want to do is hold on to things once the market has broken the dare that you put on it, that you placed in front of it, because sometimes, guess what? If you dare the market, let's look at this example here. Let's say you looked at this, and like I said, you sold here, and you collected somewhere in here, or you've got a trailing stop, and maybe you collect here, or you know, there's a combination of things you could do, you know, but you know, you would definitely look at this area in here as your next collection, and then when you get this big move, you know, you might say, well, wait a second, there's a good chance this thing may continue, so let me just keep running my stop losses, my trailing stops. And, you know, you may place your next stop up here somewhere, you know, or maybe just right above this level. And then the market, you know, didn't do what you thought it was. It didn't run away. It came back and stopped you out right in here. Okay, no big deal. You still made some nice points from this sell here. But now the market comes back to this area, and you're saying to yourself, I'm going to sell it again. You know, I've got a good chance, and I'm going to sell it here again. Well, this is why you want to stick to your rules, because had you sold it here, if you set your stop right in here, guess what? You just got taken out. You lost a little bit there. And now look what happens. The market does run, and it runs pretty hard, and it runs about, I don't know, 30 points, 40 points, all the way up to this high. If you kind of get stuck in here with this trade and you're holding on, sometimes what happens is, to most traders, now they keep looking for other areas of resistance, but they're not focused, because this position here, they didn't do what they should have done, which was to get out of this position, you know, and take their small loss. They can reevaluate what are the next areas that they're going to want to test the market at. And, you know, for all intents and purposes, big figure, 2,300 right in here might have been the next place. And you can see when it did hit there, the market did come back and provide some points. But you want to be able to do this without being in this position. Because if you're in this position, a lot of times what will happen is you'll start fumbling on your orders, and you'll start fumbling on executing the correct entries. All right, but I'm getting ahead of myself, so I don't want to even get into that. What I want you to understand is, anytime you dare the market, and the market does dare you, you need to accept it and get out. Take your loss. Because you'll find another opportunity later on. And that's really what I'm trying to get to. You know, if you did dare the market initially at this level here, and it broke, and you took a small loss in here, you might have had a chance to dare the market in here again, and then make some of those points back. And then if this didn't work, now you had a chance maybe to dare the market in here, up at this level right in here. And now you had a chance to make a lot of those points back. So what I'm trying to get to is that every time in the market that you go ahead and you say, I dare you to do something, you got to keep in mind, if it breaks your dare, let it go. Get out. Take that small loss, and now you can go back and reevaluate what's the next area you can dare the market to do something at. And a lot of times you may already have the plan in place. You know, our matrix may give you those exact levels of where you can dare the market again, and you can activate your trades. You know, that's what the tool does. The matrix allows you to see in advance, if you dare the market one place and it doesn't work, where can you dare the market again? And then just keep going on until sometimes you run out of dares. There is no more dare. You know, the market has just ran too far, and that normally raises a red flag. All right, let's give the technicals time to work themselves out before we continue putting on any more trades or daring the market to do anything more at this point. Now, let's continue, because this happens all day long. What do you think happened? And going back to the other scenario, the other book, the other side of the book, the traders who are daring the market when there's a breakout, okay, to continue. Well, you would suspect that many traders probably are getting in here somewhere, and now they're in it, and they're trying to run this, and because a lot of these traders are looking for home runs, there's probably a good chance that they're jumping in here, and they're putting stops, placing their stops, again, either down here somewhere or where? Or down here. This is where a lot of stops, right, are probably being placed from guys who are chasing breakouts. And this is happening all day long, guys. I'm hoping that with painting this picture like this clear here, you'll start to spot these things and why we trade the way we trade. But here's another classic example of how the market traps these traders who go long in here. And I'm going to go back to the way we would trade if we were to trade something like this. If we were to trade something like this, the way we would trade it and how we would minimize damage in comparison to traders who do this. Because once more, these traders who took these long positions and God forbid the ones who came in late that jumped in up here. And trust me, and I'm sure many of you, I hope, have not been there, but I'm sure some of you will say, this has been me. This is me sometimes, chasing trades here, which is definitely where you get killed. But hopefully now that's something that is in the past. Doesn't happen to you anymore because you know this information. And once more, look at the market. What did it do? Again, those who took long positions here, the market came back, and here it is, stopped them out. And then not only did it stop these orders out, but now those who were in here who've been in the previous scenario that they say, gosh, this stop, I've been stopped out here before. I need to have a bigger stop. And they place stops somewhere down here. What did the market do? Came back to take them out too. And then once it took them out, look at this. Now, if you're any of these traders that just got stopped out here, and by the way, maybe some from earlier in the morning here, from earlier these trades here, you went long and you got stopped out here, and now you got stopped out again here, and you do it again, and the market stops you out again. 4 times you've been stopped out. 4 times you've been trying to catch breakout trades, okay? And the market has come back to clean you, clock you. It's just, do you think now, after taking these kind of losses, do you suspect you're going to stick to your system? Any of you guys, do you suspect you're going to say, you know what, I'm going to stick to my system, and no matter what, I'm going to continue to do this? Anybody? Is anybody, I think most of you would answer no. If there's any of you who say yes, then, let me know, if you do say yes, how well has this system worked for you of sticking to something like this? And the answer is no. Yeah, and most of us, we're pretty shaky, man. And rightfully so. Because this kind of system, by the way, is what made a lot of money for a group that made this kind of stuff very popular. And when you make a lot of money doing something and you start selling that information, you can justify that you're right because you've made a lot of money in it. But some of these individuals who do this, I've heard as much as 20 plus trades, consecutive trades, that they've taken that has been negative, red. They've been red. So imagine taking 20 consecutive trades in the red and then some, doing these kind of trades. Again, we go back to the probabilities of success are not in your favor. And this is why, again, we stay away from this type of trading. Because, and this happens, guys, believe me, I work with a lot of traders, and this is what a lot of them will justify afterwards. And, well, wait a second. If I got stopped out here, and I got stopped out here, and I got stopped out here, and I got stopped out here, the next time I need to have is a bigger stop. And so let me put a stop down here, because there's probably another level down here that indicates this is where you should have your stop. All right? And again, look what the market did. Came back. So now, even this other stop, the bigger stop, which is now, I don't know, 100 points away, 100 points or so away. This is a 100-point stop. And you think this is going to save you and keep you in the market, and guess what? The market came back and took you out again. So this is why, we stay away from this. And we always stay to what is the most obvious. Not only what is the most obvious, but what's going to make it very simple for us to make a decision. And if we're wrong, we can live with it because there were no other options. We had no more options. There was only one option. And it made it very simple for us to make that decision. So we go back to what I'm always asking. If I put a gun to your head, what is the decision? You can't say, I'm going to sit on the sidelines. I'm not going to do anything. No, you have to do something. What is your decision? And the decision should always be the obvious, which is the one that gives me only one option. And if I'm wrong, I can live with it. Whereas if you go with the other one, which does provide you more rewards, but at the same time puts you at higher risk, has a lot of different options that you can take that you later on will go back and second guess yourself. And that's what we want to try not to do. We don't want to second guess ourselves. We want to live with whatever we do, and the outcome is one way or the other, we're fine with it. So, once more, what we want to do, if anything, and we go back to, again, the way we trade. The price finally did break out here. There's a breakout. Now, we're not chasing it. We're either going to sell up here because we find an opportunity. We're either going to sell here because we find an opportunity. Or the next thing is we're going to wait for the price to retrace, and then we're going to buy, and we're going to be buying somewhere in here, or we're going to be buying somewhere in here. It's a very simple process. If this works, I'm expecting this to get back here. If it doesn't work, I'm going to get out with my stop loss somewhere down here. So once more, I'm looking to make points up here, and I'm trying to get out here. It's fairly obvious that this separation is a lot less than this one in here. I've got my rewards are a lot greater, and if it doesn't work, I'll take a small risk. Then my next level, if I think, based on previous resistance, that is going to act as support, then obviously this would be the next place I'm going to take my trade at. And once more, if it doesn't work, I'm going to get out here. And if it does work, I'm going to get out here and make points. So again, once more, reward, risk. You see the difference? Big difference. Reward's bigger than the risk. And this is what we're trying to get everyone to gravitate towards. Where, in the past, yeah, you get in here with some of these breakouts, and you're saying, oh yeah, my reward's going to be somewhere all the way up, up here, and but my reward is really, you're looking for such a big reward, then you figure, okay, then I need to have a little bit of a bigger risk, and so you start setting risk that look like they're good, yeah, this looks like a smaller risk than the reward, but because they don't happen, and they get, and your stops are the ones that keep getting taken out, then you start reverting back to the opposite. Then this is what starts to happen to every trader. You start doing this and you don't recognize it. And so now you're saying to yourself, okay, this used to be my reward somewhere up here, Now all of a sudden, because you start getting taken out, you start doing this. Well, now my reward is here. I got in here, but my reward's going to be here because now the market has moved against me, and now I'm going to put my stop down here. So notice what starts to happen to your mindset. All of a sudden, it's shifted from what used to be the opposite. You're looking for big rewards and smaller risks, but because you've been stopped out so many times, you start shifting. And that shift is eventually what kills you as a trader. So we're trying to keep you, again, on the opposite side, and we're always doing it by Very simple, a very simple process of, if I have to do something, what do I want to do? And here is the same thing. You look at this area and here. Now this is a really fast market, but had you given this trade time to when it hit this area in here to wait to see how it responds, there's a good chance you might have bought in here, all right, and then you would have set your stop somewhere down here, and again you took a small loss, but you would have had a chance to reevaluate, and in reevaluating you might have said, hey, this is a good place to go long, and you would have made some of those points back here. And if you didn't make it here, you would have had another chance here, and then here. Look at this. This is finally when it does work. But once more, we go back to thinking outside the box and making our decision process very simple. Whereas, look what happens to traders that are thinking always to trade breakouts. Well, oops. If you broke out this area now and you're saying to yourself, oh man, look at the momentum. There's a lot of momentum. Look at the size of these candles, right? There's a lot of momentum here. So you're saying to yourself, all my signals are telling me we're going to sell. Okay? And you say to yourself, yeah, let's go ahead and sell. All right. You sell in here. Where do you set your stop? You would think, again, we go back, you see this thing repeat itself. Where would you set, if you're, hopefully looking for tight stops, you have your stop somewhere up here, right? Okay? And now you're waiting for the market to continue, because, this is a great sign. This is, as clear as momentum as there is. And you're thinking, all right, the market's going to keep driving this further down. And I'm just trying to let you see that without even understanding where, how to interpret information, how to interpret the matrix, anything, just basically purely on making a decision on the rationale of where do I have the best chance that if it doesn't work, I lose very little and I can stay, where I'm still in the right frame of mind. And we go back to, does this system make sense to you when, okay, let me chase it, let me sell here, only to find yourself now that even if you were responsible with your stop, look at what the market did, came back, what did it do? And it stopped you out. And so look at how many times this system, it didn't work back here. It didn't work, it really didn't work here either, and look at how many times, again, you've been stopped out, and now you take it the other way, and it does the reversal. And it does the reversal. And once more, again, the way we trade, we would have had maybe, let's say we made a mistake and we jumped in it right away and we took our buying opportunity right in here. I would hope, again, you had enough time and you practiced enough that you set your stop somewhere down here, you got taken out, and then you had another chance somewhere right in here to go ahead and take your next buying opportunity. And because you stuck with it, like again, you dared the market once, it didn't work, you dared it again, and look, your second time, what you lost in here, you made it back. And if you had the patience, you made a lot of it back. You made a lot of it back. So it just goes to show you, again, our system has higher probability of success than the other one, which is always, you're always daring the market to do one thing or the other. You're seeing this system here gives you better returns, and when it doesn't work, and there are going to be days it doesn't work, well, you can come back another time and you can make those points back because you don't get frustrated with taking the kind of losses that these other systems of trying to chase breakouts create. Any questions up to this point in time? Okay, excellent. All right, so I just wanted to get this across because a lot of times our traders are taking trades, or you might see that I may post certain trades, and you're looking at the matrix and you're saying to yourself, I don't understand that. What is, why is he doing that? The PMDs are pointing one way, and I just can't see it. Overlook all of that. Forget all of that. Just look at the fact that every time that we take a trade, we're daring the market. And there are many reasons that we're daring the market. You may not see them, but I'm hoping from now on you will understand that every level that the market tests, we're going to many times say to ourselves, well, I'm going to dare you that you're not going to go any further than that, and I'm going to dare you with a very small amount of risk, because even if I'm wrong, I will lose very little, and even if I'm wrong, you may actually give me enough time to get out of that position and make points, and then if you dare the position after that, I don't care. I've already made my points, and I'm okay. I'm just daring you at this present time that you're not going to go any further. And this is what happens all the times when before the market breaks out, you can see that it always tests areas several times before it breaks out. And that's why we trade the way we trade, because the higher probability of trades are almost always range bound. Here's an example of, the market came down to this level, and before it broke this level, look what it did. It kind of tested it again. It couldn't get through it, and it went back up. And look how high it went to gain momentum to finally go ahead and say, all right, now I'm going to break through it. And then when it did break through it, once more, it couldn't continue. It came down to this area in here, came back a second time, couldn't quite test that area, but came fairly close, and then it turned back around. And then we go back up here. We haven't been able to test this one, but we came fairly close here, And again, once more, the market came back, almost tested this area right in here. See? So there were 1, 2, 3 in here previous. We went ahead and tested somewhere in between that. Couldn't get through it. Market went ahead and turned again. So, once more, if I'm taking this trade, isn't it easier for me to set my stop somewhere up here where I know if I'm wrong, then just get out of the way. Whereas if I am trying to chase this move, maybe I would have gone in long in here. I don't know. Maybe I got lucky and I went long in here. The truth is, the reason I was able to catch this trade, if I was really, really smart, is because I did this trade down here. And this is where this true smart trade is taken, where there is no risk at this point in time. And if you think this thing might have a chance to run, then guess what? You're at the best place you can be. And if you were to decide, if all you did all day was just try to catch moves like these, and you would just set your stops every time, at, I don't know, break even or -3 or something, and you wouldn't collect points. Let's say all you did was all day, your goal was to do, at least minimum 30 points on these moves. Again, you would probably miss a lot of these that would provide you the accumulation of 30. So, and this is why we always collect, 7 to 10, because you could do a lot of these and you could accumulate 30 and then some, rather than try to hold on to one that eventually that one is the one that runs and provides 30, 40, 50 points. But as we've seen, there are days that it'll run for 100. And an example of that, when you look at that is basically, look at this trade. Had you been able to sell this with very little risk up here, here's your chance. If you held on through this thing, your chance at least was, about 80 points. Let's say you had an entry somewhere up here at around 20, 19, 18. You would have collected down here at about, let's say you don't collect here at 30, but, you collect at least somewhere in this area here. That's, a good 70 points. So, if you're looking at how to collect more points on your trades, this is it right here, guys. And it's catching these trades where you risk very little, but the payoff you can see when they do work. Even if you had absolutely not a clue on how to look at the matrix, how to interpret the information the matrix provides for you, if you just traded just basically from this here, I'm going to say that this here, this information alone, if I was to charge you $10,000 for it, it's a gimme, it's a giveaway. It cost me over $100,000 to learn this. It cost me well over $100,000 to learn this. So, as you guys know, we can pretty much put whatever price we want on information. Whether a person values it and sees the value of it or not, that's why we have people who pay for things, one thing, or they don't pay for something. I've just given you this information that without anything else right now, this alone is worth $10,000. And I hope you guys understand, and I'm a little bit frustrated, and then if you notice it in my voice today, is because this is so obvious, and I just feel, well, maybe I'm not doing a good enough job of communicating this. So this was my attempt today to give you that information. And you just got, at least in my opinion, $10,000 worth of info that I feel I share with you day in and day out. I feel I share with you more than that. But for whatever reason, it may not be getting across to you. And so this is my last attempt to do so. We'll put up the recording up if somebody missed it. And if you guys feel you want to share this with someone, let us know, and we'll give them access to this. But like I said, it cost me well over 6 figures to learn this information. That's my my little getting something off my chest here this morning. And I will send you the bill, so don't worry if you see your credit card get billed for 10 grand. It's for a good cause. Just kidding, guys. I hope again you all take this information, and now you can start turning around what we do day in and day out. Hopefully you can start seeing the light. When you kind of get off track, go back to this, and you can start seeing your accounts grow again. All right.